A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a move that could reshape the landscape of wealth taxation in the UK, the Treasury is reportedly exploring potential reforms to inheritance tax, IHT, as it grapples with a staggering spending gap exceeding £40 billion. As the autumn budget approaches, Chancellor Rachel Reeves is under mounting pressure to find innovative ways to bolster the nation's finances amid a backdrop of slowing economic growth, rising inflation, and increasing unemployment rates, which have reached a 4-year high. According to sources, officials are considering tightening the rules surrounding the gifting of money and assets as a means to enhance revenue from IHT. Currently, individuals can gift unlimited amounts of money or assets to friends and family without incurring IHT, provided these gifts are made at least 7 years before the donor's death. Gifts made within 3 years of death are subjected to a hefty 40% tax, while those made between 3 and 7 years are taxed on a sliding scale known as taper relief. The Treasury is contemplating the introduction of a lifetime cap on gifts, which would limit the total amount an individual could give away without triggering IHT liabilities. Such a cap could significantly alter the dynamics of wealth transfer in the UK, particularly as house prices and asset values continue to soar. A source familiar with the discussion stated, "With so much wealth stored in assets like houses that have shot up in value, we have to find ways to better tap into the inheritances of those who can afford to contribute more." This initiative is part of a broader strategy to address the growing deficit, which has been exacerbated by various factors, including increased debt interest payments and a series of policy reversals on welfare cuts. Labour MPs have been vocal in advocating for a wealth tax, but any changes to IHT thresholds are likely to spark significant public debate. Reeves and Labour leader Keir Starmer have already indicated their openness to tax increases, suggesting that the current state of public finances necessitates such measures. However, the government's commitment to avoid raising taxes on working people, as outlined in their election manifesto, presents a challenge for the Chancellor in navigating the political landscape. The proposed changes to IHT could face backlash, especially considering that only a small fraction of estates, less than 5%, currently pay the tax. The average effective tax rate for IHT was reported to be around 13% for the tax year 2022 to 23, considerably lower than the headline rate of 40%. In recent years, the Conservative Party has successfully leveraged public sentiment around IHT, particularly during the late 2000s when they proposed increasing the threshold for the tax, branding it as a death tax, and gaining traction in the polls. As the government seeks to tap into the wealth that will be transferred from the baby boomer generation, the potential for IHT reforms remains a contentious issue. The Treasury is also reportedly reviewing capital gains tax (CGT) rates, with discussions surrounding a possible increase by a few percentage points. However, any hike in CGT would likely be accompanied by allowances for investors who contribute to British businesses, as the government aims to strike a delicate balance between funding public services and encouraging investment. Anecdotal evidence suggests that some wealthy individuals may have already left the UK in response to recent tax changes, including the abolition of the non-dom status, which has raised concerns among policymakers. The government is also set to implement changes to business property relief and agricultural land tax in 2024, which could further impact IHT revenues. Despite the ongoing discussions, a Treasury spokesperson emphasized that the focus remains on growing the economy rather than solely relying on tax and spend policies. As set out in the Plan for Change, the best way to strengthen public finances is by growing the economy, which is our focus, the spokesperson stated. As the autumn budget draws near, the Chancellor faces the daunting task of addressing the significant financial shortfall while navigating the complex political landscape surrounding tax reforms. Whether these proposed changes to inheritance tax and capital gains tax will come to fruition remains to be seen, but one thing is clear: the pressure to find solutions is mounting. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.